Okay, so Joe, what do you think is leading the plunge in global equity markets? Is there a grave underlying concern?
I think it's panic, actually. I think there's almost been a perfect storm of events that's caused a mass exit and a stampede for the door. So I don't think it's one trigger. I think it's just a combination of all these events, the slowing economic figures, disappointing corporate news, the risk of a black swan with ebola. So I think it's a combination of them all that has caused it.
So US indices are inches away from posting their first 10% decline in over 3 years. Does this imply prolonged losses, you think?
I think you're going to see more losses over the coming weeks in a high volatility state that we're in. And so I think, yes, I think we are going to see more losses. I think in the medium term, I think it actually represents a good opportunity to people to get involved who've missed a large chunk of the equity rally we've seen previously. And when people calm down a little bit, there might be a opportunity to be long these markets.
Now, global equities have been on tender hooks. There are concerns over global growth, and obviously worries seem to be interconnected. What's your outlook on equities? Is the trade in favour of equities withering away, you think?
Short term, I think you want to be careful. But in the longer term, I think there is an opportunity to buy. I think if you step back, the fundamentals haven't changed significantly. They have changed, but they haven't changed significantly. We're still in a recovery phase if you strip out the Eurozone. And there is corporate earnings to justify these valuations. So I do think it gives a good opportunity to buy. Picking an entry point is very difficult at the moment, and I think you probably have to bite the bullet and get involved and prepare to see it maybe 5-10% offside initially.
Now, on various occasions, we've heard Mario Draghi say that the ECB is ready to do everything that falls within its mandate to fix things in the euro area, but he hasn't committed to a number. What's the assumption one should work with?
The assumption with Mr. Draghi is don't assume anything. He's a master of playing the markets well with speech and no actions. We saw it with the OMT program. We're seeing it with some form of QE. He is incredibly clever at manipulating and tricking the markets into believing the ECB is there for action, and he maintains his credibility. So I'm not sure what to read into him. I just think that he will not commit to anything until a gun is held to his head by the markets, and he has to actually form a price, but I'm not sure that is going to happen in the short term.